the company can always do better, but I think we're broadly quite satisfied with the numbers. We've seen a 58% growth in our total income, a 63% growth in EBITDA, and as you rightly pointed out, a 24% growth in net profit. I should point out that 24% growth is despite the fact that we did a private equity deal in the corresponding quarter of the previous year. I think the market for commercial real estate has been a little weak across India, and I think we like other developers have struggled a bit on commercial sales. We have a few projects in the commercial space, some of which, the ones in Bombay, we think will do very well, but some of the tier 2 markets in which we have commercial real estate are not performing up to expectations. However, that's not really the reason we want to focus on residential real estate. I think the prime driver for us of that decision is that we think the real opportunity for Godrej Properties is in residential real estate for 3 reasons. Firstly, in any given year, 70 to 80% of all real estate sold in India is residential real estate. So that's where the volumes in the market are, that's where the size of market is. Secondly, we try to have an asset light and capital efficient model of development. And in that, to that end, residential real estate is a much more comfortable asset class for us than commercial real estate, because you can use the cash flows from the sales to fund the development, which is much harder to do in commercial real estate. And lastly, while the Godrej brand we feel is very helpful to us across asset classes, we do think it is most beneficial in the residential space where customers have a great degree of confidence and trust in the brand, and where we are able to achieve large amounts of sales at the pre-launch and launch stage. We think the model is very sustainable. First of all, for us at Godrej Properties, we've been using this model since the company's inception in the early 1990s. So it was not for us a model that we adopted as, a cash flow situation became difficult. We've been using the model because we think it is a superior model. It allows a developer for a much lower amount of capital to do a project than if they are buying the land. We think we've demonstrated a good track record of being able to add joint venture projects to our portfolio across market conditions. So if you look at the 9 months of this financial year combined with the last financial year, we've added 15 new projects to our portfolio. These projects either have already been launched or will be launched in 2013, thereby adding tremendous value to the company. So certainly our model is here to stay. We do have some extensions of the model that have a lot of things in common with the joint venture model that we are pursuing, things like redevelopment here in Mumbai, the development management fee model, as well as a co-investment platform through which we can buy land, but will not be buying land directly on Godrej Properties' balance sheet.